So this is why we were doubling uranium positions in the midst of the hysteria after the Fed meeting. Fed minutes were released on Wednesday, right near the lows, before they skyrocketed yesterday. These are the reasons. Number one, certified ARMR analyst Erez, which you all know and love, has been pounding the table on this story and covering it for us for months. He's been doing phenomenal work, and it keeps it right at the top of our collective investing, trading mind. Okay? We're looking for opportunities. Number two, not in this particular order, but number two, you're looking at a chart right there of Sprott physical uranium. Please note, and I'll blow it up for you, that Sprott physical uranium broke out of its pennant formation. Now, you're going to see a bunch of pennants in a minute. So keep your eye. This is a pennant formation, okay? This was a big pennant here, breakout, another pennant. Sprott physical broke out of the pennant on Tuesday, Wednesday, no, on Friday the prior week. Sorry, I went the wrong way. On Friday the prior week. Okay? So Sprott physical was already going up. Now, when I read the Fed minutes, what I was sharing with ARMR Insiders on the live desk was, this is a clarion call. This is, in the old days, they're lighting the fire on the ridge. I mean, this is the church bell ringing. I mean, this is the alarm bells ringing that the Fed is dramatically behind the inflation curve. That's what the Fed minutes meant to me. The Fed dove, Lail Brainard, the day before was talking hawkish, right? She never talks hawkish, okay? This is them saying we are behind the inflation curve. So when we read those minutes, the idea was, let's increase exposure to all of our commodity positions. We were adding to our basic materials, we were adding to our precious metals, and we were doubling our uranium positions, okay? So this is the process that got us to do this. Now I want you to look at the following charts. You're going to see pennants inside of pennants. Pennants are one of my favorite chart patterns, and they're very explosive. So the first pennant is here on Sprott physical, then it makes a higher type pennant, and it breaks out of the pennant early. So it's leading the mining stocks. The leadership, the best name, the biggest name, the one with the most amount of yellow cake and inventory, as you can see, is already out of its pennant and made a kind of a different type of pennant up here, right? Where it's coming across the tops. But we were buying it, of course, here, right down at the bottom. Okay? So these ideas are working on pennants. But Sprott physical uranium, the physical's already out of the pennant. Okay? That's the lead indicator. Let's look at these are our top four names. Pennant inside of a pennant, right? Here's the smaller high tight pennant. Here's the bigger formation. All right. We're buying it right down here. Notice UEC touched the bottom of its uptrend. Let's go look at the day trading chart on UEC. Those of you who know me know that I love buying, making an investment in an asset that's trading right at the ARMR moving average, this yellow line on the day trading chart, okay? So the day we were buying, and I should say doubling our position in uranium, they were trading right at the ARMR moving average. So I always say that there could be weakness down to the moving average. And if it's an investment that's going to keep going up, it will hold the moving average, right? So as it was making this formation, we were doubling our position. All right, let's go on to UU. Same pattern, pennant inside of a bigger pennant. And we'll wrap up with NXE, which it was a new position we took on on Wednesday, we added NXE. Okay, and again, you can see the day trading chart. Right in here, we were adding NXE right in here. Okay, so what I want to share with you, you can always remember this. Look at these chart patterns. When a group looks exactly the same, I don't care, and I just showed you the top 4 names along with the Sprott Physical. You could look at all the other ones, DNN or any other name you want to look at. They all are making the same chart patterns. The reason for that, this is a group move. If we can identify where institutions are putting capital, we can get in ahead of them and make a lot of money. The way to identify institutional moves is look for group moves where a lot of chart patterns look almost identical. If I were to take the names away, you wouldn't know which one is which. That's because institutions that run, let's say, $1 billion hedge fund, he wants to put $100 million into uranium. He can't buy one stock, right? He can't buy one stock. He'd blow it out. It'd be ridiculous. So he takes the capital and he spreads it across the group. And what happens is you start to see the same pattern form on every idea. That's a footprint of the institution. Group moves are always going to be more explosive for you as you go through life. So look for group moves. Okay. Partially the reason for us to increase these positions yesterday is a bit of a now or never trade for me. I like to buy as close to the stop as possible so that my reward to risk ratio is optimal. Okay. So what I mean by that is if you look at, again, here, we'll look at NXE, right? If I'm buying this asset on this day right here, my stop is a low of this day. If I'm buying the stock yesterday, my stop is a low of the day before. So my risk has gone up exponentially because the stop is so far away. So I'd rather buy tight to the uptrend than buy the breakout. And that leads me to the number one ARMR rule of the road. Okay. We have a list, ARMR rules of the road. It's on the website. You can go take a look at it. Okay. The number one rule of the road is before I make any investment, am I on the right side of probabilities and statistics? And is the reward worth the risk? If that's a go, a yes, then I put capital to work and I get rid of all the noise around me. I bring down my investment decision to that one question. So all of the information we had out there, along with the ARMR algos, tells us probabilities are at their highest that uranium's going up. And by buying it before the explosion, my reward's worth the risk. Okay? And so that's why we're putting that position on down there. And then let me just wrap up with this thought. Okay? Because we got to get to our trading desk. I had no idea that uranium would skyrocket yesterday. Let's be honest. After that whole conversation I just had with you about how obvious it seemed to us, it's not obvious, right? You got to be in it to win it. You know, on all the other hackneyed phrases about making money investing. You'd rather be lucky than good, okay? I'm not going to sit here and tell you I have a crystal ball and knew they would skyrocket yesterday. I didn't know that. It's just preparation puts us in a position to make a lot of money. That's all. I mean, seriously. I just laid out for you step by step the thought process of why we were doubling uranium the day before they exploded. But the last thing I'm going to tell you, in all humility, in all honesty, I didn't know they were going to skyrocket yesterday. I'm following a strategy. It's called the ARMR investing way. It puts me on the right side of probabilities when reward is worth the risk. And then I let the portfolio do what it's capable of doing. If it hit the stop yesterday, I would have sold all my uranium stocks. That's the fine line between wild success and protecting capital.